Good morning. It is Wednesday. It is the 20th of June, and it's FOMC day. So, as you can see, I was just looking at the dollar index a second ago. I didn't intend for this to be up at the beginning, but anyway, this is the dollar index. We're in a very interesting area right now. As far as I'm concerned, the dollar index pulled back from a place where we would have expected resistance. In fact, we went over this on the webinar yesterday at 2 o'clock. I don't know whether many of you were on that. Let me try and get rid of that. Do that again. Here we go. Resistance, resistance, resistance. Now we've got higher resistance up here and down to the lower resistance once more. This never has really been proper support on a pullback. I mean, we have resistance and then support. So we're kind of in a potential area here for a move up in the dollar index. So just be a little bit cautious today because this potentially, if we do actually start to move back up, I'd expect maybe dollar index to move back up to this area here, up around 84, north of 84 basically. Very key area right here. It could go either way. So it's not particularly helpful, to be honest with you. Let's drop back down, look at the metals anyway. So silver, look, silver, I'm paying attention to a couple of things that are going on. Look at the new red fork. You can see the ABC pivots, and I just wanted to tell you why I've added it. Look at the slope from, whoops, let me turn off this magnet. It's really starting to bug me a little bit. Magnet, there you go. Now, look at the slope from here to here to here. Look at the slope from here to here, and then from here to here. It's pretty apparent something is going on. Hopefully you agree. And so I've tried to find the fork. And what I would look for is this. I would look to see if silver gets back up to this area here. And by the way, there's one other thing I haven't mentioned yet. Look at this gap here. So we have resistance, 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 gap, potentially implying a move to the downside. So I would actually be cautiously bearish in silver based upon this red fork. We obviously seem to be struggling in silver in terms of the purple slope, and for me the last line is right here. So you want to see silver stay above this, which is 28.17, only 20 cents below where we are right now. I suspect we might trade a little bit sideways into FOMC, so it's possible that we might sort of like trade over to this area like here, which means it will put it up around 28, 27, somewhere in this area here when news might come out. Now that's if we trade sideways. If we move down this morning to the 28 area or lower, then my focus would probably shift quite significantly to the red fork. So resistance above, we're back to this line. If we jump above there, you're looking at the upper parallel, which has never done anything previously. If we see a move to the downside, you might be looking down around 2660s, 2650s, down to the lower parallel. Obviously another line to watch would be right here. There's several lines on this red fork. What I would suggest you do is add it to your chart so you can actually watch it in real time. One of the things I might do, if it helps, is I might actually have my charts on display during lunchtime. Just literally be looking through the gold and silver charts and have people be able to look at those through a webinar. If that's something that would be useful, just reach out and let me know. And maybe what I'll do is I'll just set up a webinar. There'll be no audio whatsoever, but you'd just simply be able to see what's going on my charts. For those of you that can't, I guess, chart pitchforks, that might be something that would be useful for you. Okay, so that's silver. Gold, not really a lot to tell you. I mean, it's pretty apparent what's going on here. We have some kind of capping or horizontal resistance somewhere sort of in this sort of level here. You can see resistance, flash, back to resistance, down we go. Resistance, resistance. We're getting capped up around 1630. It's pretty apparent. The only place I'd really be looking for support is the lower parallel, which is here, which is like 1613, 1614, somewhere in that area. If you look at the line where I said to look for a bounce yesterday morning, we got a beautiful bounce, up we go. We shoot straight back down to the next line. I said, if on the webinar yesterday, in fact, this would have been as the webinar was starting right here, and I said, look to see if it becomes resistance, and that's exactly what happened. We spiked down, come back up. Our support, which was here, has become resistance. Where are we going to go? Down. This is our next support line. Meandering along, now that becomes resistance. Down we go. We're being stepped down in gold. It's pretty apparent to me. Now, here's the other thing I spotted yesterday, and I don't know whether there's anything that people would read into this. I'll leave you to your own devices. Look at last Thursday at 10 o'clock in the morning. We spike down and reverse all the way back up again. Now look at, this would have been, I think, Friday night or Sunday night. Spike down, reverse all the way back up again. Now remember, Thursday was 10 o'clock. Look at Monday, 10 o'clock. Spike down, reverse all the way back up, 10 o'clock. This was yesterday at 10 o'clock. Look at the spike here. We spike down, pull all the way back up, but now there's a second attempt. Down we come. This is at 12 o'clock. Spike down, all the way back up. Second attempt, spike down. We're not being allowed to recover now. Read into it what you will. I can't say whether this is free market action, whether pressure is being brought to bear, but to me at 10 o'clock on Thursday it spiked down, but it did recover. End of the week it was brought down, but it did recover. Monday at 10 o'clock it was brought down, but did recover. But yesterday it was brought down at 10 o'clock and it tried to recover, and it was brought down a second time at 12 o'clock, and it's been brought down further. It's almost as if someone is trying to lower the price of gold. It's very unusual. I mean, who would do such a thing? So yeah, like I say, it looks to me as if there was an attempt on Thursday, the Sunday night when it would have been thin markets, by the way. Again on Monday morning at 10 o'clock, yesterday at 10 o'clock, but this time they wouldn't let up. This time when it started to pull back up, and if you look, we pounced, came all the way back up to 1630, and they started again, bang, down to 1618, led it up to 1624, and now it's been stair-stepped lower. Look for support down around 1614. That's what I would be suggesting, down around the lower parallel. I don't have an equivalent down fork as we did in silver, but if we take out this lower parallel to the downside, I would probably be stepping aside if you're long. If we get down like to the 1610, 1611 area, just be a little bit careful. Remember the dollar index chart. I'm focusing this morning only on these smaller charts because I think these are the ones that really matter to you. I don't think the weekly chart hasn't changed. If you want to see what the weekly chart's looking like, go and look at yesterday's video, or the day before, or the day before, or the day before. It hasn't changed for a long time. I will quickly look at the 240s. So look, I mentioned this on the webinar yesterday. Remember this channel we're looking at from the low to the low? I've cloned it, not doing much up here, but up here, look at this. Bang, bang, bang. Down here, bang, 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 bang. We've got, this is working really quite nicely, and I think we might have, I think I just deleted a green line up here, let me put it back in. I think we might have resistance up here, and we have obviously the channel floor down here. Okay? Pay attention. If the floor breaches to the downside, which doesn't need much, 28, 22, like, you know, 20 cents below where we are right now, you start breaching that, I'm probably expecting it to move down to the channel floor. You breach the channel floor, which is going to be down around 27.70, step aside. Gold, I'm really not sure what more I can say, and I think I did make a comment yesterday that some people had actually taken short entries here. If I didn't mention it on yesterday morning's webinar or video, I mentioned it. I know I talked about it yesterday with someone. I had at least two people take short entries here at 1632, 1633, and I think it was 1633, and their stops were like $3 above. And their strategy, which I guess I can talk about now, now that we're 33.20, we're about like $15 lower. Their strategy was that they felt that gold would weaken, and they didn't want to be trading around FOMC, and so therefore they took an entry a day or two ago up here. Our stop was up here, and their strategy was to hopefully have gold somewhere in this area down here or lower going into FOMC, meaning they could put their stop to entry and have a lottery ticket, a free lottery ticket, and hopefully if gold did actually weaken in FOMC, they would see a move with no risk whatsoever. So we'll see how that pans out for them, but what I would suggest for everyone else is this: if we breach this line to the upside, you can start getting a bit more bullish. This is not a coincidence that we topped here. We were looking for a high in this area for the last week or two. If you recall, we actually have resistance up here. So when we come up and touched it so precisely here, second time, down we go. This was the first touch. This is what alerted us to the fact that there you go, this has worked beautifully. Second touch would have been an entry, stop was above your first. That's the line. You breach that to the upside and you can start getting a bit more comfortable. You take out this line, which is like 1580 to the downside, and I'd start stepping aside. Silver we've looked at, and then finally daily, just very quickly. I've been saying for a while now, this was the resistance up above. We need to crack through that resistance to become bullish. Failing that, I'm expecting a dip, but we need to see like 2970, 2980 to the upside to be taking out this kind of area here. Both of these lines. That's what I'm looking for in silver. In gold, similar story, except with gold, we pretty much touched it. Here we go. I'd said this yesterday on Final Approach. We only need to see 1645 to see it breaching. We just couldn't do it. We topped at 1634, and it looks like we've pulled back a little. We got resistance above in gold and silver on several time frames, and we've got the dollar index at potential support. So it's potentially a little bit bearish for the metals. But having said that, everything could be reversed, and it could turn into something really quite bullish with something quite small. You don't need gold to do a lot. I mean, literally 1643, 1645 on this chart would actually look quite bullish, and I would actually then expect to move up, into the high 1700s. Silver. Actually, the one thing I will finally point out, I know this video is going long, but I kind of figure it's worth it today. Here's the one thing I will point out in silver. Again, look at this. This is the silver chart, weekly. We got our first rejection up here, pull back, hit the line a second time, and I said we're hitting it once more, and we're pulling back from it, and we're continuing to pull back from it. We're down at 2830s right now, and we hit that up at, well, I can't see the numbers, 29 basically. We could potentially get a pretty reasonable pullback from here, but what I would look for is, if you're bullish, you're looking for really 2950 to the upside. If you see like 2930, 2950 to the upside, that would indicate breaching, and then I'd expect to move at least 3030 or even higher. It's in a very critical area for me, silver, right now, and I suspect. And what I think I said on the webinar yesterday afternoon is, I think that whatever move we see in silver may be actually quite volatile, because when you see a breach is normally volatile. A breach doesn't happen gently, it normally happens with violence. And the problem is, we're actually, whether we're going to move up or down, in a place where I suspect we're going to see a breach. If we move to the upside, we're breaching the green upper parallel, which means I think we might see a volatile move to the upside. If we move to the downside, we have the sliding parallel, which we've been highlighting here, here, and here, which, by the way, we're still sitting on top of, which I find remarkable, that we've sat in such a tight range for the last 24 hours. So we have bullish closes, which is great. Now we're actually getting support at the line, and I have to say that particular piece of analysis for me would actually indicate a move to the upside. The very fact that if I zoom out and refresh the chart, and I know we're going really long right now, sorry about this. This is the fork. Lower parallel, now we've got sliding parallel, 1 bounce, 2 bounces, 3 bounces, and look at that line, that's where we are right now. That's the line right there. So we try to pierce it, but we cannot. We close high. We try a second time, we close high. A third time, we close high. Now, the line is providing support, support, support. We're in a very, very key area right now. I think that we're going to see a breach one way or the other, and that tells me that chances are in silver we're probably going to see a pretty volatile move. Either down into this area, which is down around 23, or possibly up to like 38, somewhere in that area there. So there you go. I hope this is helpful. This is really trying to give you key levels which, if exceeded to the upside or downside, indicate to you whether we're increasing our bearishness or bullishness. Tread carefully, and hopefully you'll come out on the other side unscathed. Have a good day. Take care. Bye-bye.